Hi, Joe Kehrig with the Kehrig Real Estate Team, and this is your San Ramon Valley update. And today we're going to cover the top 3 questions that I'm getting every day in the business. Number 1, when will mortgage rates come down? Number 2, what will it take for prices to come down? And number 3, will I be able to find a home? Well, let's number 1 talk about when will mortgage rates come down. Well, looking at this graph, one of the things with the Federal Reserve is they're so sensitive to the inflation and what their target rate is. And their target rate is 2%. And we've never really hit 2%. You have to go back to 2021 when we were under 2%. And it went as high as 5.3% in 2022. Right now it's sitting at 2.7, but it has creeped up. That's why you see interest rates have actually gone up. The Federal Reserve, because remember, mortgage rates, or the discount rate that the Federal Reserve doesn't directly affect mortgage rates. That's why last time when the Fed dropped it 50 basis points, 0.5%, our mortgage rates actually went up because they anticipated that now, because some of it was already baked in to the lower rates that we had, and when the Federal Reserve talked about maybe we won't have as many drops, well, mortgage rates went up. So, but do anticipate, but much slower pace than we thought before, that rates will probably come down through 2025. We're hoping we might dip into the 5%. We basically got to 5.99 a couple of months ago, and now it's between 6.75 and 7%. But when you look at this, the mortgage rates and projections from Fannie Mae or the Mortgage Bankers Association, Wells Fargo, National Association of Realtors, everyone's anticipating that they're going to go down, but no one's really anticipating that we're probably going to get into the 5s. If we do, maybe towards the end of the year, because what the Federal Reserve is dealing with as far as, the discount rate is the fact that, with the presidency, now that we know who won the presidency, that President Trump, the stock market jumped up because they feel that the economy is maybe going to pick up a little bit with that. Well, if the economy picks up, remember, when things are going good, rates go up. Rates go down when the economy is not doing very good because they're obviously lowering the rates to try to get the economy up. So anticipate that they're going to go down, but they're probably going to go down fairly slow. Hopefully sometime in 2025 we get into maybe 5.5 to 6. But you know what? We can just hope for that. So obviously you can see with the chart that most everyone is thinking, maybe we'll get down by the end of 2025, quarter 4, into maybe the 5.5 to 6. And that would be a good thing right now. Second question, what will it take for prices to come down? Well, you know what? Don't hold your breath on this, because you look at this chart and you literally have 15 years of underbuilding, about 6 million units comparatively going back to 1970 and what we were normally building. And you can see the big spike up where we had 4 years of record-setting number of units built, in 2003, 4, 5, and 6. Well, we know what happened in 2007 and 8. We basically, were given the ninja loans, no income, no job, no asset type loans, just, passing the mirror test if you could fog a mirror. And we were stuck with 2 million new homes sitting there. So what happened is sawmills went out of business, lumber yards went out of business, and a lot of builders went out of business. So you definitely saw the market, drop down to the point, like I said, we were underbuilding by 400,000 or 500,000 units a year. Here's the second thing with that too. The second thing with that is you have people locked in. People are not putting their home on the market because they're locked into 3% interest rates. And remember, we're dealing with 6.5 to 7 right now. And even those people, what we're finding, even those people that are willing to sell, are willing to buy another home, they're deciding to rent their home out because they almost have free money, and rents have continued to go up. So they're literally sitting there in a situation where they have a nice positive cash flow, and maybe they're pulling money out to buy another home. You look at this chart, almost everyone all the way across the board are expecting prices to rise in 2025. Even though rates aren't going to come down as fast as we thought, because remember, when rates go down, prices normally go up. They're still expecting, because of lack of inventory, because people aren't putting their home on the market, because there was an underbuilding over the last 15 years, that the inventory is going to stay low. Remember, everything's supply and demand. where there's more demand than there is supply, prices are going to go up. And even though we're expecting inflationary appreciation, 3-4%, you're not going to see the 10-20% that we've seen in the past. Third question, will I be able to find a home if I move? Well, here's the good news. When you look at this graph, you can see that right now there's about 30% more homes on the market than there was a year ago. But it's actually, you can see it's going up, up, up. But there's actually, when you go back to 2018-19, kind of the last normal year, there's actually still 30% less homes on the market. So the inventory overall is down from a normal market, but it has gone up 30%. So yeah, if you're a buyer, there's homes out there that you can purchase. There's still homes going on the market. They expect to, where we've been selling 4.5 million homes, total in the United States the last couple of years, they're expecting to get above 5 million. So there's going to be activity. There's going to be homes out there, but it just, as the homes come on, they're going to get burned off, and it's not going to allow the inventory to go up to allow prices to go down. So expect prices going up a little bit, but at least if you're looking for a home, there's going to be more inventory out there to look. Let's look at our market. Typical, I'll tell you, it's typical for this time of the year, except it's kind of showing you what it's going to be in February when the buyers really start coming out. Because look at San Ramon. San Ramon, the inventory is going down, down, and down, which is completely normal. But the pending sales are staying where they're at. So you see that obviously the supply and demand, again, is getting to a point where at one point there was only half as many pendings as there was actives a month ago, 6 weeks ago in San Ramon. Now you have 52 pendings and 61 actives. Don't be surprised if we see in the next couple of weeks that there's as many pendings as there is active sales. Danville market, same thing. Pendings are down just a little bit, but listings are way down. So that's why when we hit February and the buyers start coming out, there's not going to be any inventory, and that's why you're going to continue to see prices go up. Alamo stayed pretty stagnant, and Dublin has showed a little bit different, inventory down, but also pendings are down. And you can see the average prices are sitting there around 100% where they have been. You see Alamo 91%. Well, that was just because there was only one closing, and it was way below what the market, because it had been on the market for a while, so they dropped their price almost 10%. So the market is so different. I mean, like I said, when I look at the hot sheet every morning on the market, I'll see price reductions, but I'll see multiple offers. So every neighborhood's a little bit different. If we can guide you through that and just sit down, remember, we're not there to sell your home. We're there to be an asset and a resource and be a consultant. Give you the pieces of the puzzle that we can so you make the best decision for yourself. Give us a call. Give me a call if you have any questions at all. If you just want to sit down and just chat a little bit about it. Joe Kehrig, 925-487-6838. Or shoot me an email, joe@kehrigteam.com, or visit our website to learn more about the Kehrig team, www.kehrigteam.com. And make sure you tune in, because there's going to be a lot, it's going to be a pretty fluid market over the next couple months.